Monthly paying dividend stocks and of course ETFs are popular for several compelling reasons. First of all, they offer investors a predictable income stream, making them particularly attractive for income-oriented investors, especially for those that are maybe closer to retirement and want to use some of the monthly income to cover some bills. But on top of that, a monthly paying dividend ETF also helps investors with cash flow management and allows them to have more and more cash available on a consistent basis to reinvest and to buy more different stocks or ETFs across the market. Now in this video, we are going to be going through what I think are the 7 best monthly paying dividend ETFs across the entire stock market. And what's going to be cool about this video is we are going to go through some options that are much more on the conservative side, the much more slow and steady pace, but we're also going to cover a few higher yielding monthly paying ETFs that offer a massive amount of cash flow from day one. Now, if you consider yourself a dividend or income focused investor, definitely stick around because I promise you're going to find value in this video. The first monthly paying dividend ETF that's one of my favorites and a massive portion of my personal long-term portfolio is the Amplify Enhanced Dividend Income ETF, known as ticker symbol DIVO. Now right here on their website it says why invest in DIVO. DIVO is comprised of high quality dividend oriented stocks along with covered calls on individual stocks. Now I'm personally a huge fan of DIVO for multiple different reasons, but one of the main reasons is DIVO has a really high quality basket of top 10 holdings within the ETF. The top 10 holdings for DIVO are things like United Health Group, Chevron, Microsoft, Procter & Gamble, Visa, Apple, JP Morgan, McDonald's, Goldman Sachs, and Walmart. All super high quality blue chip stocks that I do not mind whatsoever having in my long-term portfolio. Now on top of that, because DIVO does utilize a covered call strategy by writing call options on individual names within the portfolio, the starting forward dividend yield is pretty high. It's around 5% when it comes to DIVO, and of course DIVO pays a dividend every single month. Now this is sort of rare considering the different names that are within the DIVO portfolio are more or less more growth oriented, so getting around a 5% dividend yield while having exposure to some of the names that we went over a second ago is definitely something I like. Now lastly, DIVO's dividend history shows that the dividends have been paid consistently on a monthly basis for many years now, and the monthly dividend is somewhere around 14 or 15 cents on average, which is going to change on a monthly basis just because of the underlying strategy. The next top monthly paying dividend stock, another one of my favorites and another more so conservative option, is DGRW, or the Wisdom Tree US Quality Dividend Growth Fund. Now DGRW seeks to track the investment results of dividend paying large cap companies with growth characteristics in the US equity markets. Now just like DIVO, the top 10 holdings in DGRW are very high quality and names that you and I would definitely most likely want to have exposure to. The top holding being Microsoft at 9%. Then we have Apple, Broadcom, Johnson & Johnson, Procter & Gamble, Home Depot, Cisco, Merck, Coca-Cola, and Walmart. Now because DGRW does have a lot more of these growth names and it does not use a cover call strategy, the growth potential for this ETF is definitely there, considering the ETF is up around 156%, and that's just over the last 10 or 11 years. But with that, you are going to get a little bit smaller of a dividend yield, around a 2% dividend yield, which again, investors that buy into DGRW most likely are not necessarily buying into this ETF for the monthly paid dividend, although of course it is nice to have that there. Now looking at DGRW's past dividend history, it has paid dividends on time over the past say 10 or so years, and on top of that has had some decent dividend growth, which basically means that the ETF has paid more consistently over the long term to the shareholders, which is of course a bonus. The monthly paying dividend ETF number 3 is going to be QYLD, or the Nasdaq 100 Covered Call ETF. Now this ETF is in my personal long-term portfolio and it has been for years. I haven't added any more for a while because I do find that there's some better options out there now, but this is definitely a decent one to look into. Now it says on the website reasons to consider QYLD: high income potential. QYLD, or Q yield, seeks to generate income through cover call writing strategies, which historically produces higher yield in periods of volatility. And also, of course, it does distribute money every single month, which it has since I've held it years ago. Now, QYLD is going to give us a much higher starting dividend yield than any of the ETFs we went through so far, but that's of course going to come with a cost. Covered call ETFs, just like QYLD, a lot of times, not all the time, but a lot of times do have decay in an overall ETF price, and this is because of the covered call writing strategy. But with that, you are going to be getting around a 12% trailing 12-month dividend yield. And although if you look at all the dividends that QYLD has paid since inception, some of them have been much higher than what we've seen recently, the dividends have been pretty consistent and I'm not really complaining. The next monthly paying dividend ETF is going to be the JP Morgan Equity Premium Income ETF, or JEPI. Now it says seeking consistent premium income with lower volatility, JP Morgan Equity Premium Income ETF seeks to deliver monthly distributable income and equity market exposure with less volatility. So JEPI, just like most of the other covered call funds, buys a basket of stocks and then sells covered calls in the basket. Now, some of the biggest holdings in JEPI as of right now are things like Progressive, Adobe, Microsoft, Amazon, MasterCard, United Health Group, Intuit, CME Group, abbvie, and Visa. A really good high quality group of names for the most part, but also keep in mind it is going to have that cover call overlay. Now, even though JEPI does pay a massive yield, it hasn't decayed as bad as we've seen QYLD decay, although JEPI has not been around as long. Now, as far as JEPI's dividend goes, we're looking at around a 9.84% trailing 12-month dividend yield, which is pretty good, although if you look at JEPI's historical dividend payouts, they were much bigger a few years back. We're talking in the 60 cent per share per month range, and now just as of recently, we're talking in the mid-30s. The next high-quality monthly paying dividend ETF is going to be JEPQ, or the JP Morgan Nasdaq Equity Premium Income ETF. Now, JEPQ is one of my favorites because it does have a lot of the same attributes that JEPI has, which I like the strategy. But the portfolio is made up of much different stocks, considering over 8% of the net assets are in Apple, then a ton of it is in Microsoft, then we have Google, Amazon, Nvidia, and Meta. Now, because of these top holdings, even with the cover call strategy, this ETF has been off to the races, up around 14% year to date, and that's not even including the massive dividend. And speaking of massive dividend, with JEPQ, we're looking at around a 12% trailing 12-month dividend yield. And although similar to JEPI, JEPQ also did used to pay a little bit higher dividend, but things like volatility and the way the market is trading is of course going to change the amount that these covered call ETFs are going to pay on an ongoing basis. So with what we've been working with as of recently, once again as a shareholder of JEPQ, I'm not really complaining. The next monthly paying dividend ETF is going to be SVOL, or the Simplified Volatility Premium ETF. Now, SVOL seeks to provide investment results before fees and expenses that correspond approximately 1/5 and 3/10 the inverse of the performance of the VIX Short Futures Index. So this ETF shorts the VIX and makes a ton of income by doing so. Looking at SVOL's trailing 12-month dividend yield, we're almost at 18%. And if you look at the dividend history, the dividends have been pretty consistent on a monthly basis, around 32 cents or so over the last year. But just as of recently, they have dipped down to around 30 cents per share. So that's of course sort of worrisome, but we'll see during this next month, because volatility has been so crazy, if SVOL's dividend moves back up. Now, the last and final dividend ETF that does offer a massive yield is of course none other than TSLY, or the YieldMax Tesla Option Income Strategy ETF. Now, this ETF, I'm sure as a lot of you guys know, references the Tesla stock and uses a synthetic cover call strategy. And by doing so, TSLY has been able to generate some massive dividends on a monthly basis so far. We're talking anywhere from over $1 on a monthly basis, $1.06, which was distributed back in July, to just as of recently around 57 cents per share. So there we have it. Those are 7 different monthly paying dividend ETFs that are definitely all without a doubt worth looking into. And for me specifically, I actually hold every single one of these ETFs throughout my portfolios. Now, some of the more basic ETFs like DIVO and DGRW are of course going to offer a different risk tolerance than something compared to like SVOL or TSLY. And that's why I always think it's important to stay diversified, which is exactly what I do for my portfolio. But now I want to hear from you guys down below. Out of all 7 of these ETFs we went through in this video, which one is your #1 favorite and why? Comment down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.